Hello everyone. Today I'm going to start a new chapter, and the title of the new chapter is the job order costing. So first, let me explain some overview and assumption of job order costing. First, the job order costing system are used when many different products are produced in each period. So assume that this is a factory room, and here we are producing different products. For example, you produce tables, some other people produce computer, but some other people produce the mobile. So they are the different products, right? Different products produced in each period, and this is a factory. Do you understand? Now, as it is called job order costing, so we should receive the job order first. Okay, someone will give us order, and after receiving the order, we are going to produce the product. This is the second point. Products are produced to order. We receive the order first, then we start our production. As we have different products, okay, the unique nature of each job order requires allocate cost to each job. So we are going to allocate cost to each job. Although we are producing different product, right, in one factory. If this is the factory room, we're producing different products, right? But what we have to do, we have to allocate the cost for each job separately. Okay, and maintain the cost records. Maintain the cost records. So these are the overview and summary. Many products are produced in each period, and we have to receive the order first. After receiving the order, we are going to produce the product. Although we have different products in the same factory, but we are going to allocate our cost for each job separately and maintain our cost record. Now look at the example for job order costing overview. So we have three products produced in this factory. We produce tables, and it is called job title A01. Then job title B01, we produce computer, and job title, job number CO1, we produce the mobile. Okay, so these are the three different products. Okay, three different products. And you know that direct materials and direct labor for different product are different, right? I produce table, and wood is my direct material. You produce computer. So for your case, wood is not your direct material, right? CPU is your direct material. So direct materials and direct labor, these two items are totally identical, totally different for each job, right? Why direct labor is different? Because I produce table, my salary is called direct labor. You produce computer, your salary also called direct labor. So, but we are different, right? We are different. So direct materials and direct labor are identical. They can be easily identified because they are completely different for each job. But what about manufacturing overhead? Think about, in this factory, we use electricity. So I also use electricity, you also use electricity, and some other people also use electricity. And this is the life, right? But it's very difficult. Which part of the electricity came to me? Which part of electricity came to you or other people? It is very difficult to identify. Like indirect materials. Okay, so look, there is some color here. So I used some color, you use some color. So maybe you also use the brown color or red color, but it's very difficult to identify which one is used by tables, which one is used by computer or some other jobs. So, and factory cost, other factory cost, like equipment. You can see that in this room we have some equipment, and every year we have depreciation. Now, which part of the depreciation came to me and which part of depreciation came to your product is very difficult to identify, right? So therefore, we know that direct materials and direct labor can be easily identified, but manufacturing overhead cannot be easily identified. And who are the elements of manufacturing overhead? Indirect materials are the elements of manufacturing overhead, indirect labors, and other factory costs. And who are other factory costs? Like utilities. of factory. Depreciation expense of factory equipment. So these are the several examples of manufacturing overhead. And they said that we are allocate cost, right? We allocate cost for each job. So for job AO1, these three are the cost. Okay. For job BO1, these three are the cost: direct material, direct labor, manufacturing overhead. For job C, we have another direct material, direct labor, and the manufacturing overhead. So this is the overview of job order costing system. We produce different product in a factory. We receive the order first, okay, and we allocate the cost to each job. Now, look at this example for the job cost sheet. I told you that if we produce table, we know what is the direct material because it is easily identified, right? Identifiable. Then if we produce computer, we know which one is the direct materials. If we produce mobile, we know which one is the direct labor, direct material. So direct materials are easily identifiable. Same direct labor. I produce table, my salary $500. You produce computer, your salary $1,000. Someone produce mobile, their salary $800. So it is easily identifiable. And I told you that these three items, indirect materials, indirect labor, and factory overhead, this cannot be easily identifiable. As a result, we have to calculate a rate. We have to calculate a rate for this kind of manufacturing overhead. And here we calculate a rate and it is $4. At this rate, we have a name. The rate is called estimated predetermined overhead rate. What is the meaning of estimate? The meaning of estimate means that you don't know the actual number. You estimate a number. You calculate a number. So why we calculate estimate rate for the manufacturing overhead? What is the reason? What is the main reason that we calculate a rate that is not the actual one? The reason is, you know that, for example, here, factory cost, like depreciation expense, utilities expense. So some factory cost, you will get the information at the end of the year. Depreciation expense of this building factory. Okay, when we calculate the depreciation expense, we calculate depreciation expense at the end of the year, right? When we calculate the other equipment depreciation expense, exactly just 1 year later. So you cannot wait for 1 year. You are the manager, you are producing tables, okay? You are producing computer and you are producing mobile, and you have to allocate the cost. If you remember the definition, we have to allocate the cost, right, for each job. So when we are going to allocate the cost to each job, we find that some number will come at the end of the year. You understand? Some number will come at the end of the year, but you cannot wait until the year end. What you can do as a manager, you can estimate a number today. Today you estimate a number, and for example, today you estimate a number, and this is 4,000. For example, you estimate a number, and the number is $4,000. And at the end of the year, you can have the opportunity to adjust your mistake. If this number is wrong, you have the opportunity to make it correct at the end of the year. But today we cannot wait for 1 year. Today we can estimate a number and we can record our job cost, okay, for each job. Do you understand my point? So why we need to calculate predetermined overhead rate? The main reason is we don't know the number till the end of the period. Okay, some numbers, okay, some actual numbers will come at the end of the year, and we cannot wait. We cannot wait for 1 year. As we cannot wait for 1 year, what we can do? We can calculate an estimated number. An estimated number means it is not the correct number. But when the correct number will come, when the actual number will come, we can adjust it. Now the question is how to calculate the predetermined overhead rate. What is the formula? And this is the formula. So can you remember this formula? So this formula, we have two elements, two parts. This is the first part, y equal a plus bx. Okay, this is the first part, and the second part is x. So can you remember this formula? Y equal a plus bx from our previous chapter. You remember, right? So first we have to calculate y equal a. First we calculate y equal a plus bx. Okay. After calculating this, if we divided it by our x, then we can easily get the rate. We can easily get the rate. So this is the question. This is the question. From this question, okay, if this is our question, from this question we have to calculate which one first. We have to calculate first y. We have to calculate first y, because we know that y equal a plus bx. Then try to find out which part of this question is a, which part of the question is b, and which part of the question is x. We know that a is the fixed cost, right? A is fixed cost, b is the variable cost per unit. And what is the meaning of x? X is the level of activity, right? Level of activity. Now from this question, try to figure out, we have three numbers. We have 160,000 labor hours. We have $200,000 here, and we have $2.75. Now from these three numbers, try to find out which one is A, which one is B, and which one is X. Because our formula is, first we have to calculate y equal a plus bx. Okay, that means first we have to calculate y. Okay, the main formula is this one. Main formula is this. Y divided by x. Y divided by x equal, so this is equal predetermined overhead rate. Y divided by x. And we know that what is the formula of y? What is the formula of y? A plus bx, right? A plus bx. So which one is A? Look at this question. Fixed manufacturing overhead. Total fixed manufacturing overhead is given, right? $200,000. It means that this is A. This is our A. Okay? Because according to the formula, y equal a plus bx, a is the fixed cost. And $2.75 per direct labor hour. That this is B or X? B. Very good. This is B. This is B. So we find A, we find B, right? And which one is the X? $106,000 is the level of activity, right? If you use more hours, you have more cost. If you use less hours, you have less cost. So we find X. We find X. So we know A, we know B, we know X. Now, if we apply this formula, okay, so this is the main formula. Y divided by X, but Y is A plus BX. Now it is $4. So this predetermined overhead rate is $4. And again, why we calculate this number? Because we cannot wait for 1 year. Today we calculate a number, it is estimated number, but we'll change it later on. So in this chapter, you should know how to calculate this predetermined overhead rate. This is the part of your exam question. Okay, this is the part of your exam question. You must know how to calculate the predetermined overhead rate. And I already explained why we need this rate in advance. Okay, why we calculate this rate in advance? Because we cannot wait for 1 year. Now, from this chapter, you should know some keywords. This is important terminology. Okay, so you should know these are the words for this chapter, and they are important to know. So first is the raw material. So raw materials means it can be any materials, and any materials means it is the combination of direct materials and indirect materials. Okay, raw materials together. Okay, raw materials, if it is raw materials one term, it includes both direct materials and indirect materials. So the definition said that raw materials include any materials. That means here in the cost accounting, we divide raw materials into two groups. Okay, we divide raw materials into two groups. One part goes to the direct material, another part goes to the indirect materials. But if you combine these two terms together, it becomes raw materials. Do you understand? Now, second one is working process. In short, it is called WIP, working process, and another is the finished goods. So look at the definition of finished goods first. What is the meaning of finished goods? Finished goods means the product is 100% completed. Product is 100% completed and ready to use or ready to sell. Do you understand? Finished goods, look at this table. This table, I can use it, right? Why I can use it? Because it is 100% completed. Clear? So finished goods means that it is 100% completed, but work in process means that it is not yet 100% completed. It is partially completed, maybe 40% completed, maybe 20% completed, maybe 60%, maybe 80%, maybe 90%, but not 100%. If working process become 100%, it is finished goods. Okay, before 100%, it is called work in process. That means it is still in the process. Still product is producing, not yet ready to use. So these are the three terminology important: raw materials, work in process, and finished goods. So what about the cost of goods manufactured? If you remember our previous chapter, can you remember the product cost? Right? Product cost or manufacturing cost. The same name of product cost, manufacturing cost is called cost of goods manufactured. Cost of goods manufactured means we have direct material, right? We have direct labor, and we are going to add manufacturing overhead. So these three together called cost of goods manufactured, or product cost, or manufacturing cost. You already know this terminology before. So today we learn mainly 3 or 4 keywords that are important. Raw materials include direct materials and indirect materials. Working process means product not yet completed, product is still in the process. It may be 30%, 40%, 60%, 90%, but not 100%. Okay, and you cannot use this product. You cannot use this product and you cannot sell it. But when product become 100%, it is called finished goods, and we can use it or we can sell it. And cost of goods manufactured means it is cost of a product cost or manufacturing cost. Now we are going to move on our main topic. We're going to move on our main topic. This is called the flow of job order costing. Very, very important for your exam. Flow of job costing system. Now, remember this. So we have to come this level. First, direct materials. First, direct labor. Then manufacturing overhead. Okay. Become this number. And you have to remember that manufacturing overhead include these elements. Manufacturing overhead includes indirect materials, indirect labor, and other costs that I already explained. Maybe depreciation expense of factory, utilities expense of factory. Okay, something like this. Now, if you remember this, the direct materials, this number, we transfer this number directly to WIP. Can you remember what is the meaning of WIP? Working process. That means not yet completed, right? It is in the process. So when we producing a product, we transfer material to the process, right? So direct material, we get a direct material directly transferred to working process. Clear? Why directly transfer it to the working process? Because this number can be easily identified. This number easily identified. Who is direct material for table? Who is direct material for computer? Can be easily identified. As it is easily identifiable, we easily transfer it to the WIP. Same labor, direct labor, also easily transferred to where? Also easily transferred to WIP. So these two numbers, direct materials and direct labor, we can directly transfer. We can directly transfer to WIP. Do you understand? But indirect materials, indirect labor, and other factory cost, we cannot directly transfer to WIP. Why we cannot directly transfer to WIP? Because they are the part of MOH. So these indirect materials we transfer to MOH. Indirect labor we transfer to MOH. Okay. Indirect labor we transfer to MOH, and other factory cost also transfer to MOH, not WIP. I repeat again, direct materials transfer to WIP, direct labor transfer to WIP, but indirect materials, indirect labor, and other factory cost, where we transfer it first? We transfer it MOH first. Look at here, MOH. Do you understand? Now, these three together called WIP. Direct materials, direct labor. So direct materials already transferred to WIP, right? Direct materials already transferred to WIP. Direct labor already transferred to WIP. Now, manufacturing overhead transferred to WIP. But manufacturing overhead is the combination of these three. Indirect labor transfer to MOH, indirect material transfer to MOH, other factory transfer to MOH, then MOH transfer to WIP. So how many times WIP will increase? According to this example, WIP is going to increase 3 times. WIP is going to increase 3 times. When? Because this number, if you remember the definition, WIP, it is partially completed, right? So this number will increase. This number up to 100, this number will increase 3 times. So this number WIP is going to increase how many times to become, then if we add plus, it become 100%. It become 100%. So how to become 100%? How to become 100%? Because we are going to add something here, right? So which one is first one? First one is direct materials, we transfer it. Then direct labor, we transfer it, right? Then manufacturing overhead, then MOH, we transfer it. So when this three number came together, okay, then maybe it is converted from 40% to 100%, something like this. Then when it is 100%, then this WIP transferred to finished goods, because finished goods also 100%. Finished goods also 100%, something like this, right? You understand? So if you look at this table, direct materials transfer to WIP, direct labor, but these 3 items cannot transfer to directly to the WIP. So indirect materials, indirect labor, and other factory. First we transfer where? First we transfer MOH. After transferring MOH, then we transfer it to MOH to WIP. Clear? So what is the summary here? Now I can write to the summary. Look at the summary first. Look at the summary first here. So it's direct material, okay? Direct material transferred to WIP. Direct labor transferred to WIP. Then indirect material. Do you understand? Indirect IM means indirect material. Indirect material transferred to which one? MOH. Okay. Then indirect labor. Indirect labor transferred to MOH. Then other factory. Other transferred to where? Other factory transferred to MOH. Do you understand up to here? Then when these three goes to MOH, when these three going to MOH, then MOH transferred to WIP. You understand? In middle, the yellow color is important here. So indirect materials, indirect labor, and other transfer to MOH. When they transfer to MOH, then MOH transfer to WIP. Then WIP transfer to where? Can you remember? WIP transfer to where? Finished goods. What is the meaning of finished goods? Finished goods means it is ready to sell, right? It is ready to sell. It means that finished goods transfer to where? Finished goods transfer to sales department. Finished goods transfer to sales department. Okay. So this is the flow of cost. These examples are called the flow of cost, and these are the steps. These are the 8 steps you have to remember. Okay, direct materials transfer to WIP. Okay, direct labor transfer to WIP. Then indirect materials, indirect labor, and other factory overhead cost transfer to MOH first. After transferring to MOH, then MOH transfer to WIP. Okay. And last step, we need to do some adjustment. So can you remember what kind of adjustment we need here? What kind of adjustment we need? Okay, we compare can you remember this kind of MOH? This kind of MOH is based on estimated number, right? This kind of MOH is based on estimated number, and at the end of the year, we'll get the actual number. Okay, at the end of the year, we'll get the actual number, right? At the end of the year, we will get actual number, but before we estimate a number, if we have wrong estimate, we need to do some adjustment. Okay, I will show you very soon. But these are the main steps. These are the main steps. Direct materials transfer to WIP, direct labor transfer to WIP, indirect material, indirect labor, and other costs transfer to MOH. Okay. Then MOH transfer to WIP, WIP transfer to finished goods transfer to sales department. Then if we make any wrong estimation at the end of the year, we need to do some estimation. Okay. So these are the steps. You can see that these are the steps. These are the steps. 9 steps. Now I am going to show you the journal entries. I'm going to show you the journal entries about these steps. So here You have to remember these steps clearly if you want to solve the question in the exam. So can you remember this one, the raw materials? Raw materials. So raw materials include direct materials and indirect materials, right? Now, if you want to produce tables, if you want to produce computer, if you want to produce some other products, you need to buy raw materials, right? First, you buy raw material. After buying the raw material, then you use this raw material in the production. Clear? This is the first journal. This is the first journal here. Company purchased raw materials. Okay, the question will tell you. Question will tell you that this company purchased raw materials. Okay, this company purchased raw materials, and raw materials include, I already told you that raw materials include two parts. One is direct raw materials, another is indirect raw materials. Okay. So when you buy raw materials, you should remember from your principles of accounting course that raw materials is our asset. Inventory is our asset, right? Inventory is our asset. So if you buy inventory, your inventory increase. That's why raw materials inventory debit. Why raw materials inventory debit? Because you purchase it, right? So your raw materials increase. Now, if you pay cash, you have to record cash credit. If you do not pay cash, you have to record accounts payable credit. Do you understand the journal? You buy raw materials, inventory, your inventory increase. If you pay cash, cash credit. If you do not pay cash, accounts payable credit. Therefore, you have to read the question very carefully, whether you paid cash or not. Okay. If question mention you that paid cash, then you have to record cash credit. If your question do not mention about cash, it means that it is accounts payable. So we purchase our raw material. After purchasing raw material, look at here. We already have raw materials, right? Now direct materials goes to WIP. Direct materials goes to WIP, and indirect materials. Direct materials goes to WIP, and indirect material goes to where? MOH. Do you understand? So when direct materials goes to WIP, which one is increasing and which one is decreasing? Direct materials transfer to WIP. Which account increase and which account decrease? Very good. Direct materials decrease. Direct materials decrease, minus, right? And WIP increase. WIP increase. So both are the asset account. Materials and working process, they are the asset account. So one asset increase, another asset decrease, right? So direct material decrease, that is raw material decrease, and WIP increase. So look at the formula. First one, direct materials used in production. What is the meaning direct material used in production? It means that direct material transfer to WIP. Clear? Look at the meaning. Direct materials used in production, it means that direct material transfer to WIP. So working process, WIP debit, and raw material inventory decreasing, it is credit. You understand? Before, look at here. Before you buy raw material inventory, it is increasing debit. Now you use raw material, your raw material decrease, it is credit. And raw material transfer to WIP debit. Do you understand number two? Number two is this one. Direct materials transfer to WIP. Then indirect materials transfer to where? Indirect materials transfer to MOH, right? Which one is increasing and which one is decreasing? If indirect materials is decreasing. Indirect material is decreasing and manufacturing overhead is increasing. Clear? Do you understand? So look at this number. Indirect materials. So we done direct materials. Now we are in the part of indirect materials. So indirect materials used in production, it means that indirect materials transfer to MOH. Just this table, very simple. Just this table. These are the part of MOH, right? Indirect materials, indirect labor, factory cost, they're the part of MOH. So they transfer to MOH first, from MOH to WIP. So look at the journal for second one. Look at the journal for indirect material. This is the journal. Indirect material transfer to MOH, MOH debit, and raw materials decrease, it is credit. Clear? So for direct materials, our raw material decrease. For indirect materials, our raw material decrease. Direct materials goes to WIP, indirect materials goes to MOH. So we done 1 and 3, right? What about 2? Direct labor transfer to WIP, right? So again, WIP increase and direct labor, okay, decrease, something like this. Anyway, direct labor transfer to WIP. Look at here. Direct labor means salary, right? Direct labor means salary. So look at the journal. Direct labor transfer to where? Direct labor transfer to WIP, WIP increase. So this is WIP increase. Increase means plus. WIP increase. And working process is asset increase debit. Now, direct labor means salaries, right? If you pay cash for the salary, your cash decrease. If you do not pay cash for the salary, then salaries and always payable credit. Do you understand? I repeat again, you have to read the question carefully whether this kind of expense paid in cash or not. So direct labor is salary, and this salary transfer to work in process increase, debit. And if company pay cash credit. If company do not pay cash, then payable credit. So we done this one. We done direct labor. Then same, what should be the journal for indirect labor? What should be the journal for indirect labor? MOH debit, right? MOH debit. And if you pay cash for labor, cash credit. If you do not pay cash for labor, then payable credit. So now we are number 4. Indirect labor. This is indirect labor. Indirect labor transfer to where? Transfer to MOH. Indirect labor transfer to MOH. So MOH increase. MOH increase, we record MOH debit. MOH debit. Now, indirect labor is the salary, right? Security guard salary, cleaner salary. Now, if company pay cash credit, company do not pay cash, salaries and always payable credit. So we done this. Now other. Who are the other? I told you that. Who are the others? Others may be utilities expense, factory. It should be related with factory. Or you know that depreciation expense we may have for factory building, factory equipment, or we may have office building, right? But which one is related with factory? Manufacturing overhead. If it is factory equipment, factory, always factory goes to the manufacturing overhead. So these are the other expenses. These are the other expenses, and these other expenses transfer to MOH. So MOH increase. MOH increase. Again, MOH increase if you pay utilities expense. Okay. If you pay utilities expense in cash credit. If you did not pay utilities expense for cash, you have to record payable credit. But for depreciation is different. I am going to show you. Factory utilities. Factory utilities transfer to MOH. MOH increase. MOH increase. So manufacturing overhead debit. Manufacturing overhead debit. Now for these utilities, if you pay cash credit. If you did not pay cash, utilities payable credit. Okay. But for depreciation, Can you remember what is the journal of depreciation? Main journal of depreciation is this one, depreciation expense debit. Depreciation expense office equipment, factory equipment. So this is the main journal. You remember your principles of accounting 1, depreciation expense debit, right? Depreciation expense debit, accumulated depreciation credit, right? Can you remember this? This is your principles of accounting 1. Depreciation expense debit, accumulated depreciation credit. Now depreciation expense transferred to where? Now depreciation expense transferred to MOH, right? Do you understand? Depreciation expense transferred to MOH. So we delete this one. Depreciation expense transferred to MOH, MOH debit, and accumulated depreciation credit. You cannot write cash here. Why you cannot write cash here? Because depreciation is non-cash transaction. Do you understand? Depreciation expense transferred to MOH, MOH debit, and accumulated depreciation credit. Clear? Now I told you that look at the steps here. So this up to here we done. Up to here we done. So direct materials transfer to WIP, direct labor transfer to WIP, and indirect materials, indirect labor, and other costs transfer to MOH. Now MOH transfer to where? MOH transfer to WIP, right? Now which one is increasing? WIP is increasing and MOH is decreasing. MOH is decreasing. And can you remember? Here we have to use predetermined overhead rate. That means estimated number. Can you remember this one? So when we transfer MOH to WIP, we use our estimate number because we cannot wait for 1 year, right? We cannot wait for 1 year, so we use a number we calculate by ourselves. So MOH decreasing, WIP increasing, right? So look, this is the journal. So we done up to here. MOH now transfer to WIP. MOH transfer to WIP, and we use which number? We use the estimated number. Do you understand? Now MOH increase, MOH debit, sorry, MOH decrease, it is credit, and WIP increase, it is debit. I repeat again, manufacturing overhead transfer to WIP, therefore WIP increasing debit, and manufacturing overhead decreasing, it is credit. Okay. It means that everything is now under WIP. It means that we have WIP and it is already included direct material, already included direct labor, and already included MOH. So these 3 items all together already transferred to where? Already transferred to WIP, right? Now what is the next step? WIP already have direct material, already have direct labor, already have manufacturing overhead. Now what is the next step? WIP transferred to finished goods, right? WIP transfer to finished goods. That means finished goods is going to increase. Finished goods is going to increase. And this WIP is going to decrease, right? So look at the journal here. This one now. We are now here. Finished goods transferred, so WIP transfer to finished goods. So finished goods debit, you can see this one, finished goods debit, and working process becomes 0, right? Working process do not have anything because it is already transferred to where? Transferred to finished goods. So this is the finished goods. Now after transfer to finished goods, this finished goods, that means ready to use or ready to sell, it is 100% completed. 100% completed. Okay, it is 100% completed and ready to sell, right? Now finished goods transfer to sales department. Finished goods transfer to sales department. So we have one journal here. Finished goods is decreasing. Finished goods is decreasing. Clear? Finished goods is decreasing, and our sales revenue is increasing. Our sales revenue is increasing. Do you understand? So one journal for sales revenue, another journal for finished goods. Here we have two journals. If you remember your principles of accounting 1 course, okay, when you sell your inventory, we have two journals, one for revenue, another for cost of goods sold. Can you remember this? If you cannot remember, you have to go back to your principles of accounting course again. When we sell our inventory, okay, when we sell our inventory, we have two journals, one for revenue, another for cost of goods sold. So look at these two journals. Look at these two journals. We sell our goods, sales revenue credit. If you receive cash, cash debit. If you do not receive cash, accounts receivable debit. Okay, if you want to get full marks, be careful about you receive cash or not in the exam. Okay, if you receive cash, very good, cash debit. If you do not receive cash, accounts receivable debit. Okay, so this is first journal. Second journal is about cost of goods sold. So I told you that when you sell our inventory, our finished goods decrease, right? Our finished goods decrease, it is credit. And we immediately record our cost of goods sold for these finished goods. So this journal, I repeat again, this journal you already learned from your principles of accounting 1, if you remember. Now after that we have some periodic cost, right? Who are the periodic cost? Office and admin cost. Same office and admin cost. If you pay cash, cash credit. If you do not pay cash, payable credit. Like here, salesman or office salaries. Salaries expense debit. If you pay cash, cash credit. If you do not pay cash, salaries payable credit. This is periodic, right? This is not manufacturing overhead. This is not working process, because this is another part. We are now out of the factory. You understand? We are now out of the factory. We are in the office. So office salaries or salesman salaries, salaries expense debit. We pay cash, cash credit. We do not pay cash, accounts payable credit. Like advertising, advertising expense debit. If we pay cash, cash credit. If we do not pay cash, accounts payable credit. Okay. So finally we are here. We need some adjustment. We need some adjustment. Which kind of adjustment we need? We are going to compare our estimated manufacturing overhead and our actual manufacturing overhead. Okay. So look at the example first. Look at the example first. Here. Look at last two numbers here. For example, estimated means we applied this number to the MOH, right? We transfer MOH to WIP. Estimated another name. I repeat again, estimated another name is called applied amount. That means we transfer MOH to WIP. We apply estimated rate. For example, the estimated number was $10,000. Estimated number, for example, okay. Your estimated number is 10,000, but actual is 12,000. Actual cost is 12,000. That means you make a mistake, right? This is your mistake. You record 10,000 cost. You record 10,000 cost, but your actual cost is 12,000. Now we need to add 2,000 more cost. Clear? Why 2,000? Because you estimate lower, but actual higher. Now it should be, before you record 10,000, before you record 10,000 plus, you have to record another 2,000. 2,000. Because before you estimate higher, right? Sorry, before you estimate lower. Now before you estimate higher, but actual is lower. So before you record 12,000, but actually is 10,000. So you have to minus 2,000. Do you understand this plus and minus? Do you understand? Now, plus means you have to record more cost. Minus means you have to record less cost. Clear? So that's why look at here, cost of goods sold debit. Cost of goods sold sometimes debit, you can see that. Cost of goods sold sometimes debit, cost of goods sold sometimes credit. When we record debit and when we record credit. If you record cost of goods sold debit, it means that you have to add your cost. Okay. If you record cost of goods sold credit, it means that you have to decrease your cost. Clear? You know this from resource accounting 1, right? Expense increase debit, expense decrease credit. So if you want to add 2,000 more, then cost of goods sold debit. If you want to deduct 2,000, cost of goods sold credit. And it is going to adjust with which account? It is going to adjust with manufacturing overhead account. Why? Because manufacturing overhead, before you estimate a number, right? So we are going to adjust this cost plus or minus with which account? With manufacturing overhead account. Clear? Now this is the last journal, an important journal for the exam. If you do make mistake here, I will deduct more grade. Do you understand? This journal is the important journal for your exam. If you make mistake with calculating number, if you make mistake to write the journal entries, you have more deduction. More deduction. So before come to the next class, please read this class again and again. Okay. Try to understand why we transfer some account from one place to another place and what is the journal entry. You have to remember this by yourself. Okay, I will give you the transition. You need to do the journal entries in the exam. Okay, so we will solve 1 or 2 questions in our coming class based on these journal entries. So therefore, you should read this kind of journal entries again and again before you come to the class. Okay.